Good morning and welcome back to the Daily Grind. I'm your host Chum Change. This is live and recorded. For anybody that might be new here, what we typically do is go over crypto news in the space. I update myself, bring you guys along for the ride. Happy Wednesday. Forgot to say that. Let's see who's here in the chat and then we'll get into this. Mr. Big Black, what's up, dude? Dan R, my man, good to see you. Integra Guy, we got Leo Lustig in the house. Steve Mint, good to see you. Chris, good morning. I don't think I've seen you before. Good morning. Let's see, DJ Death Star, who else is here? All set. Backwards Miner, Vinny, good morning, sir. Dakota Miner, Zarkov, good morning. Guys, did you see H-bar pumping? Crazy pump. Let's get into this. Anybody else I may have missed, I apologize. First things first, Bitcoin looking like a $66,000, 626 Bitcoin. That's crazy. We have Ethereum at 3282. Everything is looking fantastic in the market as of right now. LTC is up 2.87% on the day at 86 bucks. We got Caspa over 13 cents, just barely, but it's there. We have ETC at $28. We got XRP at 54 cents. Dogecoins at 16. Looks like everything's pretty much up on the day for the most part, except for ADAs at 49 cents. Solana's 159 bucks. Not too bad. Yeah, everything's looking really good. Looks like Pepe and WIF are actually back up again. H-bar, as you guys can see, look at this, 12 cents. This thing was up 80% last night. Actually, I think it got to like 14 cents or something, maybe 16, I forget. It was pretty high though. It was pretty high and it was very unfortunate. I was not able to swap it out of my tangent. Moving on to crypto bubbles, look at this again. H-bar 42.9% on the day. Crazy. Oh, there it is. It got to 17 cents. That's what it was last night. I was trying to swap out of it and it would not let me for some reason. Anybody else have a problem trying to swap out of H-bar last night? Let me know. But looking pretty good. It is at 12.7 as of right now. Hit 17 cents again. 17.7 last night was the peak, it seems to be like. We have Bonk at 39% up on the day. Looks pretty good. We got WIF 22.8% up on the day. Algorand is up 16.3. You know what? This is one of the coins I should have got some of. I don't have any Algorand, to be honest. CKB is up 12.3% on the day. We have Pepe up 16.8. Floki up 15.2. What is it, like the day of the meme coins? What's going on here? All the meme coins look like they're pumping. Crazy. Sand is up 4.1. Hell yeah, I haven't checked my bag yet. It's at 50 cents. Nice. The Sandbox is actually a metaverse coin. This is in my altcoin video. If you guys haven't seen that, go check it out. But this coin's actually available on Coinbase. Easy to buy. What else? Ondo. Looks like Ondo's up to 91 cents. Bonk's finally pumping again. Yeah, said Nerd Beast. Nerd Beast, what's up, dude? Good to see you. We have Celestia up 3.1%, $11.69. Nice. We have AKT, a cash network, is actually down 15.2% to $5.18. Gala is up 6.1% today to 5 cents, so 5.15 to be exact. Mana, Decentraland. This is one of those coins that I wonder if it's gonna pump this run. I don't know though. I think it might, to be honest, but we're at 49 cents as of right now. It's up 4.4% on the day. I honestly haven't looked into it too much, but I kind of feel like I should. Ronin is up 3.4% on the day, $3.47. Link is up 1.7. KuCoin is up, KuCoin's token rather is up 4.2%. Jupiter up 5.6. AXS, Axie Infinity, is up to $8.29, up 8.9% on the day. Nothing else really jumping out at me. Fetch AI is up 5.4 at $2.60. Not too bad. All right, Flashbang Fear and Greed Index looking like a 72.
Perfect.
That is awesome. It's been holding under 75. That's what I want to see. That's what I want to see. I wonder what's going to happen, if we're going to get a sell in May and go away, or if we're going to stick through it and kind of just float sideways for a bit. What do you guys think? Windfair, what's up, man? What do you think about KDA? KDA, to be honest, I don't really think much about it. I don't, to be honest. I'm not invested in it. And as like a miner, they the whole ASIC machine thing kind of just threw KDA for a loop on me, to be honest. But I'm sure it's a fine project. I haven't looked into it enough. All right, let's see. We have trending coins over here on CoinGecko. This is Gala. We have Apu. Is it? Hold on. Is this that coin somebody in the chat said to us yesterday? Is this that coin that somebody mentioned in the chat yesterday? Does anybody know? I think this is it. We have Mimu the Bull as well. Dude, what is this? This is like literally the day of meme coins. All right, you know what? I retract everything I said about this yesterday to that guy, because clearly he was right. Oh my God. Hold on. What time? Hold on. When did he talk about this? Was it the end of my stream? That's messed up. I'm just gonna go hide in the corner. You guys can just take the stream. That's a big damn it. All right, well, you know what? I thought he was just chilling it. I didn't think we were gonna see a 40% pump. That's insane. That's insane. Anyways, top 10 coins on CoinGecko. By CoinMarketCap, we get Bitcoin, Ethereum, Tether, BNB, Solana, USDC, Lido Staked Ether, XRP, Dogecoin, and Toncoin still in 10th place at a $20 billion market cap. That's crazy. ADA, I think, still deserves 10th place. Just my opinion. But we're at a $17.5 billion market cap. I wonder what's going to happen there. And I guess if you guys haven't seen Geek of All Trades video that he put together for like kind of off of Hot Crypto Mining's interview about Ergo and how everything is what is it called, Rosin Bridge or something like that. Is that how you say it? I think it's Rosin Bridge, if I'm not mistaken. He did a quick video this morning about it. It was like 4 minutes long, 5 minutes long, and it's kind of neat how I guess Ergo and ADA are kind of doing something together with this Rosin Bridge thing. So I don't know what's going to happen with Ergo, but that might be a good option. It might be a sleeper coin. Who knows? I guess we'll have to see. Chainlink is another one that I think is going to do very well in Polkadot. They're kind of going to more or less make different ecosystems connect in a sense, right? Like draw a bunch of dots on a piece of paper and take lines and you can connect them any which way you want. So it's more or less communication between blockchains. So these two probably going to do pretty well in the altcoin season. We have Litecoin looking like in 22nd place, up 2.6% on the day. Again, I think Litecoin is going to be one of them coins that probably do an easy 2 or 3x. If you guys look, 2017 2021 bull run, this thing should be up here like $410 if I'm not mistaken. I have a feeling Litecoin is going to at least do it a 3x at least, but again, not financial advice. Do what you want. Same thing with Cardano. I've said this 3 weeks straight. Let's go to the max chart again. 2017 run up, 2021 run up, and they haven't stopped developing. So I think this is probably going to be an easy 6x. My opinion, not financial advice. It's just what I'm doing. HBAR is in 26th place. Damn, this thing was at 9 cents this weekend. God, this thing had a run up yesterday. What made this thing run? Does anybody know? Oh man, what was his all-time high? All-time high, it's down, so it's down 77%. Wow, I didn't know that. So it's 56 cents. Maybe I did know that, I forget. But anyways, 2021 had a run up, and I guess it pumped yesterday up to like 17 cents, 51%. I don't know, I think Hedera's kind of like a, I watched a video on it and it's kind of like a Caspa-ish. I don't know, it's weird. It's trying to solve the trilemma, right? And yeah, I need to do more research on it. I need to understand it better, because the video I watched was pretty good, but it wasn't enough basically to be able to talk about it. All right, we have Caspa over here, 13 cents just about. It's at 12.97 as of right now. I think if we break out of the 13 cent range, if we get up to like 14 cents or so, it's going to break this downward trend, and hopefully we'll have another leg up for Caspa. So they're working on their Rust protocol, and smart contracts will be coming shortly after, so that should be very awesome. Render is a very good coin. I think this is going to be a sleeper as well for like the big tech giants, right? This is $9.21. It's a DPIN project, and this is this actually has utility. It's easily purchasable on Coinbase. So if you guys are interested in that, no affiliation with Coinbase, that's just the exchange I use. Let's see, Ethereum Classic, I think it's going to do very well in the next run up as well. Same thing, $28 as of right now. The name Ethereum alone, to be honest, is probably going to shoot this thing up, right? 2017 bull run was like 30 something bucks, sorry, $43. Then we had the 2021 bull run, whatever its all-time high was, $167. It's down 83%. And if you just look at the chart, it's you know, it spiked up, obviously came down, and then it's still riding up, right? I think this is going to carry us as miners through the next run. What do you guys think? What is this? Crypto KJ, what are you sending me? Oh boy, what is this? All right, looks like you know what, fine, I'll read it. All right, we'll read it. Hedera H-bar price soars 70%, then crashes amid BlackRock Association rumors. Oh bruh. Oh, is that what it is? Is that what happened? Hedera's recent announcement about tokenizing BlackRock's US Treasury money market fund on its blockchain has set off a frenzy of trading for its native cryptocurrency H-bar. Although it's important to clarify that BlackRock wasn't directly involved in this project, the news has caught the attention of traditional finance or TradFi giants, highlighted the potential of Hedera. Ooh, that's crazy. All right, I'm gonna have to read into this later. That's kind of crazy. Thank you, Crypto KJ, for that. Here, I'm gonna put this. Actually, Crypto KJ already put it in the chat. So if you guys are interested, go check that out. I'm gonna have to look into that a little bit more today. That's crazy. I didn't hear of that. Nuts. All right, let's move on to the mining segment of things and see what we're looking at here today. All right, we got. Hold on one second. Damn it! I just closed the screen that I didn't mean to close. Sorry, bear with me for a second. Okay, there we go. Let's see, we have top of the charts, the KS5 Pro 21 terahash unit looking like $108 a day. We got the KS5 20 terahash unit making $103 a day. We got the KS5L making sorry, this 12 terahash unit making $58.38 a day. In the AL box, this is the one I wanted to talk about. 360 gig hashes, 180 watts. This thing, I think it was going on Gold Shell for like 7k, maybe 6k. So this price is a bit off, but I think like Crypto Miner Bros is like 14,000 bucks. It's insane. It's making $58 a day. That is, it's all right. Let's be real. All right, the wattage, the money a day, that's fantastic. But this thing is literally taking a 2x shit in the last like 3 days. Has it not? So some big farm turned a lot of hash rate on, and the difficulty went way up. It's probably going to kill GPUs for a lot of us, so if it already hasn't. And yeah, I don't know how this is going to hold up when the new machines come out, but $58 a day, and it was over 100 literally a couple days ago. It's killing us. Piranha cards, I said your name right. I almost said it wrong again. Those are FPGAs, he says. Okay, interesting. I wonder what's gonna happen. It's either that, bro, or the fact that they pre-sold a bunch of these units and people have them. That's probably what happened. I always say Panera. I don't know why I read it like that, but yeah, I said it right this time. Piranha cards. All right, let's move on. We have the BMKS Max 11 terahash unit making $50 a day. The Windminer K9s making $49.19. We got the KS3 from Ice River, the original 8 terahash unit making $36 a day, and the KS3 M6 terahash unit making $25.11. Bruh. That's kind of terrible. Let's see. It was Gold Shell testing the AL box miners. Oh, dude, imagine. Dan R, you're probably 100% correct. You probably are correct, actually. They got to do the burn-in test. Come on, man. They're going to make sure they all work for, like, you know, a couple months. And just to say they're all sold out, well, they take all the profits, get your pre-orders in, and then they'll send them to you when they're done. Ogre. No, to be honest, I'm not really a fan of Panera. All right, Jazzminer X16P. We have 5.8 gigahash unit mining ETHW and ZIL, most profitable, $24.09 a day. Shout out to Jingle Mining, they let me use that. If you guys haven't seen that video, it's a great machine. I actually liked the fact that it was pretty silent, but the fact that it's $9,000, it's too expensive for what it is. That's just my opinion. My opinion is what it is. Mr. Geek of All Trades, thanks for being here, man. Backwards Miner says RXD, which is Radiant, half of its hash rate came off from FPGA's farm. Let's see. So they could have moved over. Oh, maybe. Yeah, maybe. That's crazy. Well, Radiant just went through a halving, so that profitability is obviously going to be going in the shitter for a little bit until things are figured out or it gets price appreciation, one or the other. All right, the Antminer L7 9050. I got mine down at Terra Hosting. Shout out to them. I'm paying 10 cents kilowatt hour. This is what I'm profiting after 10 cents kilowatt hour, $13.09. You guys, man, I still can't believe my electric rate's 30 cents. It kills me every time I go out to that trailer and all my shit's off. Drives me nuts. I got to get my solar stuff kicking off a little bit more than I have been lately. So I'm gonna be doing a video on that in a couple days. I actually started yesterday. It was raining today, so it's going to be interesting. If I can't record, then obviously I'm not going to be able to. Let's see, the S19K, where are you? Here we go. S19K. I got one of these as well. I'm still mining Bitcoin. I watched Mr. Mining King's video yesterday. If you guys didn't see that, actually, it was a very good video. He kind of went over the projected what you're going to get from Digibyte, and he did a test on it for 24 hours to see what he actually yielded on Digibyte. It says I'm making 656 a day on Digibyte with my S19K, right? And I guess that's not the case. It wasn't the case. These calculators aren't doing some math correctly. So Bitcoin's probably still the most profitable, but man, with Bitcoin, I'm still making $10.84 a day.
So is that a joint?
Didn't mean to hit that one, but I guess I'll take that as well. Perfect. That is perfect. That is absolutely perfect. Yeah, I can't complain. I think that's awesome. All right, let's see the gold shell KA box. Ooh, this is the Caspa miner here. 1.18 terahash unit. This thing's going for 2140. Is that really how much this thing costs? $5.58 a day. Yeah, I wouldn't buy that. That's crazy. We got the KS1 1 terahash unit making $4.10 a day. Scroll down a bit and check out my KS zeros. I just got 2 of them up on solar this morning with a timer. Actually, it's working great. Super excited. So we got KS0 Pro 200 gigahash unit making 87 cents a day. That's a 10 cents kilowatt hour. You guys know I'd be making like 30 cents per unit, probably 40 cents per unit with my electric rate, but seeing as they're free, no electricity, I'll be making over $1 a day on each one of those units, so that's pretty cool. Yeah, nothing else really jumping out at me. I guess the KS2 is the only one I didn't go over. 821 a day. Crazy. All right, let's move on to GPUs. See what the most profitable coin is over here. I know you guys are all trying to figure out what to mine. Ironfish, man, seems to be the best. Ironfish and Pyron. Crazy. It's daylight savings. Get on it. Wait, what? Not yet. I mean, but didn't it already happen? Our shit already happened, didn't it? I don't know. I'm pretty sure it already happened, Black Hat team. All right, we got the RTX 4090, Ironfish and Pyron top of the charts, and Nexa as well. Actually, real quick, let's check out Nexa. How's Nexa doing today? It's down 1%, 1.1%. Not looking that great. Nexa's not, I mean, I don't know. I don't know how I feel about this coin, to be honest. How's Lithium doing, actually? Let's check that as well, because we're here. $2.61, man. Honestly, though, it's still doing well. It's still doing really well. I guess we're gonna have to see. It's really only time will tell with Lithium. And Ironfish is, oh, really? Just type in iron, that's it. It's down 2.1% today. It's $1.52, but I guess I see, like, I'll never mind this coin. The devs just rugged this coin to me. I don't know, somebody, I don't know what happened. It came out at like $150. This is not accurate. This coin came out literally on my other screen and up halfway up my wall. And yeah, it just completely tanked. And yeah, it's not going to be, definitely not going to be for me. But if you guys can make profits and swap out of it, just mining it, why the hell not? So Ironfish is going to be probably your most profitable on all these cards. The regular 4090, the 170HX, the 4080 is actually Cortex, if I'm not mistaken. That's that symbol. We have, let's see, Graham on the 50HX. Graham was top of the charts for a while, but I guess Ironfish and Pyron, or Ironfish and Husat. Interesting. You have longer daylight. Geez, yes, I do. Black Hat. I do. Wart, looks like Wart on the BC250. Interesting. We have Zano on the 3090 and on the 7900 XT is most profitable. Chlor looks like it's profitable on the 6800 XT. Nice, nice. Not too bad. Conflux and Radiant on the A5000. You guys know Radiant, again, just went through a halving. We got Firo. Firo? What? I haven't seen Firo on the chart in forever. That's weird. What the hell is AE? I don't remember what this one is. I forget the name. I tried to... Is it Eternity? Is that what it is? I remember trying to pronounce it yesterday. It was awful. We have the Radeon 7, Chlor and Raven. Looks to be the best there. Firo on the 90HX. So I guess you guys got a few coins to choose from, but I would stick to Ironfish if you have like any of the newer cards. Just Ironfish and swap right out of it. This is my opinion. I am personally mining Pyron over to unminable to stack more Caspa. That's me. I hope you I hope Furo gets hacked. Says DJ. Perfect. DJ Mines. My man. All right, let's see if there's any new coins. Oh god, we talked about this one yesterday too. Peppa Pow. Peppa Pow, the script meme coin. I still don't know. How are they not gonna get sued? How is this not gonna get somebody sued? Look at this shit. It's Snout just a meme coin. That's great. Please guys, if you're going to download any of these wallets after you go to these sites, once you're off of miningpoolstats.stream, you're on your own. So make sure your computer's VLAN or something. This computer's protected, so I'm not worried about it, but you guys need to be safe. This coin, yeah, I don't know. It's kind of a neat meme coin, I guess, right? People can relate to Peppa Pig, I guess, so they would buy it, but to have the logo, you're trying to live off somebody else's hype, which is kind of awful to me. All right, so looking at the events calendar real quick, we have Octaspace just went through its reward reduction 20 hours ago from 2.3 to 1.85. Bitcoin Gold went through theirs 10 hours ago. Radiant went through their block reward reduction 5 days ago. Pretty crazy. Keva Coin is the next one up on the list, 17 days. Pyrons in 27 days. Ethereum Classics in 36 days. So on and so forth. And we'll continue to check this list out on the day. All right, moving on to the news segment of things. Nerby says, I will say iron does run nice and cool on my cards. No issues so far. Yeah, that's kind of the good thing about Ironfish, right? So whatever, like I said, just mine what's most profitable and swap what you want, or that's what Mr. Max Voltage always says. So I would have to agree with him there. All right, SEC lawyers resign after gross abuse of power in crypto case report. Crazy. 2 lawyers from the United States Securities and Exchange Commission, the SEC, has reportedly resigned after a district court sanctioned the agency for gross abuse of power and acting in bad faith in a crypto case. According to an April 22nd Bloomberg report, Michael Welsh and Joseph Watkins, lead attorney in the case against crypto platform Debtbox, I'm not sure what this is, to be honest, resigned earlier this month. Sources familiar with the matter say that the lawyers were warned they would be terminated if they stayed. The lawyers were both relatively new to the agency, as indicated by their LinkedIn profiles. Welsh served as a trial attorney at the SEC from December 2022, while Watkins acted as an attorney at the Division of Enforcement beginning in January 2023. The pair's resignation followed a court decision from Chief Judge Robert J. Shelby, the federal judge hearing in the case in Salt Lake City, Utah. In March, Judge Shelby sanctioned the SEC for false statements and misrepresentation in its case against Digital Licensing Inc., known as Debtbox. Judge Shelby said that in March 18th, filing that the commission above discussed conduct constitutes a gross abuse of power entrusted to it by Congress and substantially undermined the integrity of these proceedings and the judicial process. In August 2023, the SEC obtained an emergency relief to halt the Utah-based company temporarily freezing its assets and obtaining restraining orders against Debtbox's principals under claims of a $50 million crypto fraud scheme. Judge Shelby further stated that the evidence put forward lacked any basis, but was nonetheless presented in deliberately false and misleading ways. In quotations, it says Welsh knew his statements from the TRO hearing was incorrect. Rather than correcting the misstatement, he and the commission attempted to subtly shift the language to I cannot speak today. To shift the language to gloss over the perpetuate the misconduct. All right, I'm done reading. I can't speak clearly. Anyways, the SEC, what else is new? Shit going on with them. They suck, and we all know it. All right, we're going to move on to actual news clips of the day. I want to enjoy the rest of my coffee instead of choking over words. Words are hard this morning. Bitcoin halving kicks off the bull run. Let's see what Mr. Anthony Pomp has to say. He posted this on his channel. I'm not exactly sure when he was on Bloomberg because I couldn't find this actual clip, but let's see what he's got to say over here, guys. Hit that like button. Appreciate you for hanging out. Let's do it.
What was it, last week or a week and a half ago?
Loud.
We were down around 60,000. You get a nice bump back up. 66,000 today, Shonali.
66,000, but still off those highs. Let's take that contrarian view too. Taking a look at Bitcoin climbing following the weekend's halving. Remember, the halving cuts the number of Bitcoin produced daily in half. We're going to discuss that more with Pomp Investments founder Anthony Pompliano. And I think you sit here on a Monday, calm after the storm, and you wonder, did it work? I mean, the halving worked, but did it really create that catalyst for crypto that everyone expected?
Yeah, one of the things that everyone wants to see is like the halving occurs and a minute later, all of a sudden the price goes up or down or sideways, what's going to occur. But what we've seen historically is that the halving does take some time to kind of work in. There was great research that came out of Bitwise, and what they showed was in the month before the halving, the average return over the last couple of bull markets has been 19%. In the month after the halving, it's been 1.7%. So you'd say, oh, if I look at it as a 30-day before, 30-day after, it doesn't really matter. But if you actually look at it over a longer time frame, let's say 12 months or 18 months, the halving has marked a point where then we go up. And so it's just classic economics 101, right? If demand stays the same and you take away half of the incoming supply, the price has to adjust up or down to accommodate everyone. I think that this time won't be any different.
You have to wonder how long the halving kind of works as a monetary theory, if you will, and a way to control the supply of Bitcoin. To your point, if demand stays the same, but at what point do you know that demand will continue at the same pace that it has? We've already seen a lot of those flows into the ETFs start to moderate.
Yeah, what's interesting is that Bitcoin actually, the demand in terms of aggregate dollars is actually going up. And so what you would look at is you say, oh, there's lots of people who already own Bitcoin. Who else is going to buy Bitcoin? Well, the biggest pools of capital are still left. And so if you look at some of these large sovereign wealth funds, et cetera, the ETFs introduce a way for them to actually get price exposure without taking control of the Bitcoin. So you can imagine there's certain countries around the world that all of a sudden they were buying Bitcoin, taking self-custody. People would be asking some questions. Why are you doing that, right? Why are you taking your central bank reserves and getting it out of these other assets that the U.S. likes you to have it in? And so I do think that the ETFs will allow that price exposure. There are sovereign wealths that are going to go ahead and allocate to it. The question is just how much higher will Bitcoin go in this bull market? And that's what everyone's trying to figure out.
There was a lot of talk before we sort of ended up in this this new bull market. There was a lot of talk about regulation, right? Of course, you got whatever the SEC was trying to do. And then you had other regulators across the world basically trying to clamp down on this. You don't really hear about that much anymore. I think they kind of feel like, well, we've put out our proposals and, that's the best we can do.
Yeah. So I think that Bitcoin is the first asset that's kind of gotten through the regulatory gauntlet, right? And regulators around the world say, hey, this is not a security. This thing is kind of a digital gold, and we're okay with that and going to treat it that way. The other assets very much feel like they're still in the gauntlet, right? And constantly there are regulators both in the United States and elsewhere trying to figure out how to classify these things. The nice thing about the United States capital markets is that usually the regulators figure it out. It may be tumultuous on the way there, but eventually they will reach some agreement and they'll all treat it the same way. And that'll provide clarity for people to go and start building in this industry in a way that I think is conducive to what we're trying to accomplish in America.
I know some of that regulatory risk has shifted away to Bitcoin, to some of the other digital assets, but there's also been a lot of talk about maybe a potential upswing for some of those assets as well. The idea that they haven't necessarily participated in the rally to the same extent as Bitcoin.
One of the most interesting things that people kind of wake up to coming out of the crypto world is there might be more degens on Wall Street than there are in the crypto world, right? If you say to someone, hey, you can get 10x leverage, if you say that there's 100x opportunity, there's a lot of people in suits and ties that are going to pay attention. And so I do think that we like to have a black and white world and say, oh, like all the risk takers over here in crypto, all of the smart money is on Wall Street. But naturally, there are just as many risk takers, if not more, on Wall Street. And so what I think is now going to be a big narrative going over the next 12 months, how do those investors get access to those assets, right? And so you're going to see altcoin ETFs. You're going to see them start to create all kinds of different funds in the private markets, closed end, open end, et cetera, where they are going to try to get at these assets that they believe are asymmetric because they want returns. And there's not that many returns in other asset classes.
Anthony, I know you invest kind of across asset here. Do you think that at this point you would put more money into Bitcoin versus the big tech giants? Or do you start to take some chips off the table in Bitcoin as somebody who's been a traditional crypto investor and invest in normal way markets? I mean, which is a better risk asset to you at this point?
Yeah, there's a really interesting bifurcation that's occurring. If you're optimizing solely for return, I think people will continue to allocate to Bitcoin and cryptocurrencies because they see it as a more asymmetric asset. It's got a bigger tailwind, more capital flowing in there. One of the things that people are not talking about yet, though, is people in the crypto industry who have built wealth up. When they go to a bank and they want to get a mortgage, they want to get some sort of loan, et cetera, the banks write their crypto assets to zero. And so now all of a sudden, if you show up and let's say you have $10 million of crypto and you have $100,000 in the bank says you're worth $100,000. And so what I do see a lot of people in the crypto world is they're starting to diversify slightly, not a ton, but slightly, because they're trying to actually say, look, I'm going to get married. I'm going to get, kids. I'm going to try to buy a house. I got to go kind of live my life. And so I think it's going to be very interesting. The wealth generation in crypto starts to seek into these other asset classes.
And can they do
That's actually a good point.
that, though? Can they sort of provide that without actually giving up control or basically giving up ownership?
So this is where we're never going to have a competition, right? Yeah. Obviously, the legacy folks, if you go talk to the banks, their official position is, hey, we don't touch those assets. The younger people in the banks, they want these people to be able to interface with their financial services, et cetera. But right now, you've got to sell the crypto to be able to get fiat or kind of traditional assets put into the bank. Yeah. What I do think is happening, though, is there's people in the crypto world who say, well, why don't we just go offer those same financial services and we'll touch the crypto. You won't have to sell it. And I think that's where the competition is going to be. Will the old incumbents win, or will these new players come out on top?
All right, Anthony.
Is that going to come out to like a CBDC type deal thing? That's kind of like the way I think that the whole conversation was going. Crypto for Seniors, did you post anywhere on Discord the tokens final ranking you guys did live? No, I think we're going to finish it this week because we didn't get to all of the coins. So this Saturday night, we'll probably end up finishing that up. All right, Yahoo Finance, moving on. History shows Bitcoin halving is a bullish sign for crypto. Let's see what they got to say over here. Guys, that like button. Appreciate you for hanging out. Hate asking, but YouTube makes me.
Switching gears, though, it's been quite a wild ride. For Bitcoin in 2024, we're not even halfway through the year yet. We just barely made it out of Q1 here, and we're midway into Q2. So prices have been on a tear, as you've been seeing on this chart. Year to date, the largest cryptocurrency up 50% year to date, thanks to demand for spot Bitcoin exchange-traded funds, those ETFs, and that started trading in January. And of course, most recently, the once every 4-year halving event that took place last Friday, keeping the supply of Bitcoin limited and maintaining the decentralized currency's storage of value. So now, where do crypto investors stand? And if you're not an investor, should you be? For more, I'm joined by Rick Edelman, joining us here this morning. Great to see you, Rick. Digital Assets Council of Financial Professionals founder and the author of The Truth About Crypto. All right, so a lot of us are learning once again the truth about the halving, and coming off of that major event in a year of what's been major event on top of major event with the ETFs that we had mentioned earlier ago. So now, what does the future hold? What is the prospectus now for Bitcoin for the rest of 2024?
This guy's super bullish on Bitcoin.
Good to be with you, Brad, as always. The halving drew a lot of attention to what's going on in the world of crypto. The halving is a once every 4-year event. Affects only Bitcoin. That is the largest, oldest, most popular, best known coin. So it gets a lot of attention and people are excited about it, and understandably so. But the halving event in and of itself is just an ordinary element of how Bitcoin operates. So history tells us that in the year following a halving, Bitcoin's price has always risen dramatically. Now, we all know past performance doesn't guarantee the future, but it has always been demonstrated to be a bullish signal for crypto. So there's excitement for that reason. You cited the most important reason, though, for why there's excitement, and that is the launch of the new ETFs, the spot Bitcoin ETFs that debuted in January. That is the key reason why there's so much excitement about what's going on in the world of Bitcoin these days. So the halving is now behind us. Everyone's excited that it likely will generate higher prices over the next year. And the Bitcoin ETFs are in the market now, and that is generating massive new inflows for investors, and that is causing a price spike as well. So a lot of bullishness for the world of Bitcoin right now.
What is the determining factor in whether or not someone should be considering crypto for their portfolio?
2 key criteria, Brad. Number 1, are you a long-term investor? And number 2, do you own a diversified portfolio? Meaning if you are of the mind that you want to own a little bit of everything, stocks, bonds, government securities, real estate, oil, gold, foreign assets, emerging markets, then crypto belongs in that portfolio just like everything else. The whole point to a diversified portfolio is to reduce your risks. Don't have all your eggs in one basket. You want to diversify. So the more you diversify, the better off you're going to be from a risk perspective. In that context, adding Bitcoin to your portfolio, even though Bitcoin itself is risky, the science tells us that adding risky assets to the portfolio actually lowers the overall risk of the portfolio thanks to diversification. So if you are long-term and diversified, you ought to have a little bit of Bitcoin in your asset allocation.
And then additionally here, as we're thinking about some of the other ETFs that have also been filed for, where there could be some significant kind of flow activity that takes place, Ethereum, and that's set to have its own kind of shining light over the course of this year too. Is what happened for Bitcoin expected to be the same for Ethereum here?
Very likely. There are a dozen or so applications in front of the SEC right now to allow for Ethereum ETFs. The general attitude is...
What do you guys think in the chat, actually? I'm going to put a poll up. I want to know if you guys think the Ethereum ETF is actually going to happen.
Is that the SEC will say no in May to those applications, but everybody is hopeful that the SEC will say yes by the end of the year or certainly in early of next year. Ethereum is the number 2 asset, and between Bitcoin and Ethereum, they have about 90% of the total market share of all of crypto out of tens of thousands of coins. Those two are really it. They're kind of like the Coke and Pepsi of crypto. So a lot of people are very excited that Ethereum is going to eventually have its own set of ETFs, and there's a lot of bullish for that and for Ethereum and some other coins too. And
on the regulatory front, if anyone is adding crypto to their portfolio, what most notably could move the dial one way or the other this year?
We could see legislation possibly in the area of stablecoins, and this would be the first crypto legislation ever, and it would demonstrate that Congress is recognizing that this is a new legitimate asset class. It is a new technological innovation that has legitimate place in corporate commerce, and that's all very exciting. So watch for what Congress is doing. There are a couple of bills in the Senate right now that just might get advanced before the elections. The other thing is, on the other side of that coin, the SEC continues to hate crypto. Gary Gensler, the chair of the SEC, is continuing his enforcement activities. He continues to file lawsuits against crypto companies, continues to believe no new regulation is necessary, continues to believe that...
Yet he teaches, you know, a Bitcoin class at MIT?
There's no positive place for crypto in the American landscape. And so if you were to see that kind of activity continue, that could be perceived as bad news for crypto, at least here in the U.S.
All right, Rick, just lastly, while we have you, it is Financial Literacy Month as well. And so we got to...
Yeah, I think Solana is going to be the next one. It has to be. They've been showing Solana and talking about Solana a lot on the news recently, right? So I think after Ethereum's done, I think Solana is going to be the next one in line.
And with one key term that people need to know from your radar and surrounding Bitcoin here.
DeFi, decentralized finance. DeFi refers to the fact that crypto works as a direct link between two people, two parties, buyers and sellers, creators and receivers. And there's no intermediary. There's no third party in between you and me. And as a result, blockchains are able to operate faster and cheaper and safer 24/7. Imagine you doing stock transactions without a broker in between you, or getting a mortgage without having a mortgage company in between you. This is why DeFi, decentralized finance, is a term you need to become familiar with.
Rick Edelman,
mortgage companies suck ass. All right, I'm going to kill this poll. Ethereum ETF going to happen? The question mark. Yes, 63% of you guys. I agree. ETH 27%. Some of you guys still crying over spilt milk. Cut that shit out. All right, talk shit and make money. We're gonna make money here. All right, Crypto World, CNBC Television, crypto lobbying groups sue SEC over expanded dealer rules. Let's see what they got to say over here on Crypto World. Guys, that like button. Appreciate you for hanging out. Hate asking, but YouTube makes me.
Today, a group of crypto lobbyists sues the SEC. The Philippines tells Apple and Google to remove Binance from their app stores. And Adam Sullivan of Core Scientific breaks down what's next for the miner after the latest Bitcoin halving.
You guys hear the bullshit about TikTok being banned as well? Weird.
Welcome to CNBC's Crypto World. I'm Tanea McKeel. Cryptocurrencies holding steady this morning with Bitcoin hovering right around $66,400. Ether meanwhile rising to $32.25 and Uniswap trading at about $8. Let's talk about the top stories. A group of crypto lobbyists is suing the SEC over an update to its rules regarding dealers. Back in February, the agency adopted rules that added significant market participants to the definition of dealers, which falls under the purview of the regulator. Well, on Tuesday, the Crypto Freedom Alliance of Texas and the Blockchain Association filed suit against the SEC and Chairman Gary Gensler in federal court, saying the agency's newly expanded definition of a dealer goes too far. They argue it could encompass people participating in digital assets that don't engage in conduct that resembles dealing. Now, we reached out to the SEC about this lawsuit, and a spokesperson said the commission undertakes rulemaking consistent with its authorities and laws governing the administrative process and will vigorously defend the final dealer rules in court. At the same time, 2 lawyers with the SEC have reportedly resigned after a federal judge sanctioned the regulator for gross abuse of power in a crypto lawsuit. We reached out to the SEC about this story too, and a spokesperson said the agency doesn't comment on personnel matters. Next, Venezuelan oil company PDVSA reportedly wants to use Tether to skirt U.S. sanctions. According to Reuters, as the Biden administration reinstates a Venezuelan oil ban, the company is looking to the largest stablecoin by market cap, Tether, to minimize risk of freezing accounts. Last week, the country's oil minister, Pedro Tellechea, told Reuters that digital currencies might be the preferred method of payment for some oil contracts. Tether told CNBC that it respects the sanctions list and is committed to freezing sanctioned addresses. We also reached out to the Department of Treasury but didn't hear back right away. Yesterday, the Department of Justice unsealed an unrelated indictment charging individuals from the Venezuelan-run oil company alleging evasion of U.S. sanctions in 2019. And finally, the Philippines Securities and Exchange Commission is ordering for the removal of Binance from app stores. The regulator announced it sent notices to both Google and Apple requesting the removal of the crypto trading app.
Oh, shit.
The requests emphasize the believed threat Binance poses to Filipino investors and that it operates in the country as an unregistered securities broker. CNBC reached out to Binance, Apple, and Google, but didn't immediately hear back. The regulator warned of blocking Binance back in November. The same month, the exchange reached a monumental settlement with the U.S. DOJ that included the resignation of founder and then CEO Changpeng Zhao. All right, for our main story, we're still watching crypto markets and miners after the 4th halving for the network last Friday. I spoke with Adam Sullivan, CEO of Core Scientific, about how the publicly traded miner prepared for this latest halving event and what's next for the company.
That's crazy. They could just take Binance off the store, so you can't have the app anymore. Like, that's nuts. And I agree with DJ. He said, let me see, where was it? He said you're not a fan of TikTok. Oh, it'll be banned for 2 years. Interesting. They say you're not a fan of TikTok because you feel it makes people dumb, but you're not a fan of dictating what people do with their minds. Let people be dumb. Less competition for me. I agree.
Well, thank you so much for joining us. We just had Bitcoin's 4th halving.
It does suck that they can just control you like that. Like you can't watch something you want to watch or do something you want to do because they don't like it. It's stupid.
And it came just months after your company exited bankruptcy, relisted on the NASDAQ, and then just recently announced an expansion of your facility in Denton, Texas. What is your strategy after this most recent halving? And is the expansion in Texas part of that strategy in the face of smaller block rewards?
That's a good point. Fully Electric said they can always just use the website. Yeah, just log in through the browser, I guess. No app, but...
Yeah, so Bitcoin creates abundant energy by its very nature. And so what we look to do and the approach that we took from the very beginning was to find low-cost stranded energy in locations that were also viable for other use cases. You know, what you saw with our expansion in Denton, Texas is that, you know, we not only believe that ERCOT and the Texas market more broadly is a very strong market, not only for Bitcoin mining, but also for potentially other use cases as well. So we're definitely focused on continuing to build out our Bitcoin mining footprint over the course of the next few years. But we're also going to look to continue to expand into other business lines as a way to monetize our asset base in the best way possible.
We saw Bitcoin transaction fees surge immediately after the halving, and then they came right back down just as quickly. Are you hopeful that transaction fees will continue to climb and supplement that lost mining revenue, especially with things like ordinals? And what could drive that? Since, you know, last year we saw that big spike, another similar spike recently, and it's not just that big spike and then it continues. So what could start to bring that trend back?
Yeah, I mean, what we're seeing right now is the runes really in the post-halving world has been almost 50% of the transactions that occurred directly after the halving. Obviously supporting Bitcoin miners, you know, Bitcoin miners, we love to see transaction fees higher on the network. And so from our perspective, we're very supportive of any projects that are developing directly on the layer one and are transacting actually on Bitcoin. So from our perspective, we obviously applaud the Runes launch. And, I think going forward, it's something that we can't expect to see, right? We can't expect to see transaction fees stay this high for an extended period of time. When you look back throughout the course of the Bitcoin network, you see blips, maybe they last as long as a month in terms of higher transaction fees, but transaction fees will come back down. And that's going to have a major effect on the Bitcoin network, because what we've seen is profitability stay high enough where not many machines have actually come offline. And so we expect to see over the course of the next 1 to 2 months, we'll start to see that normalize as transaction fees start to come back down. And then the profitability also comes down with it. And that's going to remove a lot of the older generation equipment and some higher power cost sites from actually being able to participate in the network.
Crypto World's Mackenzie Sagalos reported on miners potentially turning to AI to brace for slashed revenue from mining. Is that something Core would consider given the boom in AI right now?
Absolutely. What we like to do is maximize the value of our asset base. Our asset base has access to low cost and a lot of megawatts at each of our sites. So all of our sites are really ideal for also hosting HPC from the perspective of many of our locations are located next to major metropolitan markets, meaning they'll have low latency, which is a requirement as part of HPC and AI. And so we announced our first deal earlier this year with CoreWeave, and we're going to continue to explore any way that we can maximize the value of our assets. Today, that looks like it's AI, as the demand for AI is extraordinarily strong, but we're going to continue to evaluate more opportunities down the road in any way that we can maximize the value of our asset base.
What are the plans for Core specifically this year as you look to continue your comeback in 2024?
Yeah, our comeback's been strong. We emerged earlier this year, and we're continuing to grow. We announced our first expansion of 72 megawatts, just extending our infrastructure lead on the industry. And we're going to continue to refresh our machines over the course of 2024 to not only increase our exahash exposure, but also increase our margin profile. So it's about protecting our existing asset base. And Bitcoin has been a very profitable enterprise for us over the course of the past 7 years since we entered this industry. And as part of this, we're also adding on a kind of a secondary component to this, which is continuing to evaluate our asset base. And that's why we've been talking a lot publicly about we're evaluating different potential contracts on the AI side, because it's tremendous value. It brings stable free cash flow to an industry right now where Bitcoin miners are faced with high volatility. And so figuring out ways to make our revenue streams, our free cash flow streams, much more stable and much more easily to project, 5 years, 10 years down the road, that's going to add value to the base of our business right now, which is Bitcoin mining.
Turning to Bitcoin itself, what is your outlook for the asset this year more broadly? The big catalysts seem to be here already. We've had the spot ETFs, we've had the halving. So what's next, and what are you tracking when you watch the price of Bitcoin?
Yeah. Before he answers, Jim C in the chat asked, what are you guys using for a Bitcoin pool? Just so I know, what have you noticed to be the most profitable? He was asking what I use. I use F2 pool. I heard via BTC is good. I don't really know much about them. I don't have an account over there. I've never used them personally, but I've heard good things. And then you guys know Nice Hack. I'm not really a huge fan of them, but you guys can obviously if it's most profitable, then do it. But what pool are you guys using? That would be very helpful if you guys throw that in the chat.
Yeah, I think the big question is whether the ETFs were the launching pad for allowing Bitcoin to rally post-halving, or whether we saw that rally pre-halving. There's still some catalysts on the horizon. When you look back at previous halvings, the time period at which Bitcoin rallied post-halving has elongated over time. And so you'd expect to see that most likely in kind of the 6 to 9 month time period, just based on looking at that trend elongating over time. And then we also have some other catalysts as well, such as the Hong Kong ETF, which I think will provide some tailwinds to Bitcoin price over the course of 2024.
Fully Electric is an OG in space, says via BTC for life. I've never used them.
Okay, that's all for Crypto World today. We'll be back again tomorrow.
All right, shout out to CNBC Crypto World. All right, we're going to move on to Mr. Lark Davis's video. First, exposing BlackRock's Ethereum gamble. Let's see what he's got to say over here, guys. If you're not subscribed to Lark, go check him out. Links in the description below. Again, I update myself, bring you guys along for the ride. Let's do it.
BlackRock, the New York-based asset manager that controls more wealth than almost anyone on the planet, except for basically nation states, actually, and really only two, which are the U.S. and China.
Damn, they hold $9.5 trillion in assets. That's crazy.
These guys are no joke.
That's
They
nuts.
kind of do own everything. It's crazy. And under the leadership of CEO Larry Fink, BlackRock has recently been making some serious, potentially dangerous moves into the world's second largest cryptocurrency, Ethereum. But what exactly is BlackRock up to, and should we be worried? What is their angle here? Does it all simply equal to Ethereum just going to go to the moon? They're going to pump our bags. Thanks, Larry Fink. Or is it possible that there are more sinister motivations behind BlackRock's actions here? Well, in today's video, let's do a deep dive. Let's have a conversation on BlackRock's Ethereum gamble and see if we can get an idea of what might be occurring. What are they actually up to? Let's start off with a few simple facts about our old buddies over at BlackRock.
You know what? I didn't notice that. He doesn't have a curl today.
BlackRock is a multinational asset manager that represents clients from over 100 different
Damn, they got 10
nations.
trillion bucks in
BlackRock's
assets. That's
signature
crazy.
product is their iShares ETF brand, which offers ETF investment exposure on most of the world's major stock exchanges. BlackRock invests in everything from public and private companies to residential and commercial real estate, right on down to infrastructure projects, to commodities, to currencies. Their finger is in every pie. And do not underestimate the relationships that BlackRock has with the major U.S. power brokers. They're very close with the Federal Reserve. They're very close with elected representatives and senators. Everyone is in their pocket. Financial regulators, everybody. Case in point, BlackRock has filed 576 ETF applications with the SEC, and all but one of those were ever approved. BlackRock knows the game. Basically, BlackRock gets what it wants. Okay, so most of us know that BlackRock runs IBIT, which is the most successful U.S. spot Bitcoin ETF with an estimated 250,000 Bitcoin under management at the time of recording. But not long after BlackRock began pursuing their spot Bitcoin ETF, they made a pretty quick pivot towards Ethereum. In November 2023, news broke that BlackRock had filed for a spot Ethereum ETF. And this seemed like a pretty aggressive move, given at the time the SEC hadn't even approved any of the Bitcoin ETFs yet. Of course, the proposed ETH ETF acts like the Bitcoin ETF, giving investors exposure to Ethereum via BlackRock shares, while Coinbase would act again as the custodian partner. So, okay, great. This all makes sense. Pump our bags, Larry Fink. Let's go to the moon. But what is BlackRock actually thinking long term here when it comes to Ethereum? Well, about 2 months after they filed their spot ETH ETF in January of 2024, the big kahuna himself, Mr. Larry Fink, went on a round of interviews with TradFi legacy media shows, and Fink basically spilled the beans as to how they view Ethereum and its relationship with the traditional finance world.
I think he's talking about when Larry Fink said, what's it called? Like everything needs to be tokenized at some point. Like you and I could be tokenized, and like that stuff's kind of scary. But I mean, the way the world's going, it makes sense, I guess.
This clip out between
so
Larry
he shows
Fink
something.
and CNBC host Andrew Sorkin.
Longer
this
term,
is it. This is the one I was thinking of.
do you now expect other cryptocurrency ETFs? Meaning, do you think
crazy.
that Gary, and we'll talk to him later, Gary
like Ethereum
will have to approve an Ethereum ETF? And is that a function of something the SEC has to do, or do you think that all these things have to go to court first?
I couldn't respond to that. I see value in having an Ethereum ETF. As I said, these are just stepping stones towards tokenization. And I really do believe this is where we're going to be going. We have the technology to tokenize today. If you want to talk about, think about this. If you had a tokenized security and you have a tokenized identity, you, Andrew, the moment you buy or sell an instrument, it's known. It's on a general ledger that is all created together. You want to talk about issues around money laundering and all that. This eliminates all corruption by having a tokenized system.
Wow.
I mean, realistically, he's not wrong. But yeah, it's kind of a pry into everything, right?
There's a lot to unpack there. But if you think that Fink made a slip of the tongue, then look at this interview with Bloomberg Television.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we could customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe if you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own shares.
Okay, look, Fink comes right out and says that BlackRock believes that tokenization is the future of finance. But what does that mean? Well, Larry Fink is talking about real world assets, or RWAs, moving on chain. Stocks, bonds, currencies, commodities, money market instruments, real estate, all of it.
That's kind of what like the useful case of like actual NFTs could be, right? Like house deeds, car titles, medical records, things like that, right?
Everything. According to Fink, we may see a day when these assets no longer trade between separated networks that are controlled.
DJ Mines in the chat just said, I got a friend request from Chump Change. Fake one. Haha. I can't wait to troll them. Yeah, guys, please be careful. Like, you guys, if you get friend requests from me, it's 99.9% of the time not me. So please just know that. I'm going to go in there and ban them right now.
Controlled by the brokers and the stock exchanges and the settlement partners, clearinghouses, all that kind of stuff, but rather that they will all trade on a unified ledger with digital tokens representing the actual assets themselves. Interesting. But listening to Fink talk about this vision for the future, some things he said, they were music to my ears, and other things he said, it gave me a little bit of creeps. The big win here is this entire vision could seriously bump our bags. Trillions of assets could come on chain, providing wild liquidity. Assuming RWAs do get pulled into public decentralized chains like Ethereum, then watch the heck out, guys, because tens of trillions in wealth will be coming to be tokenized and traded on chain. Pretty soon you'll be able to get an NFT of your house and get a loan against that to buy dog coins. It'll be amazing. Anyway, owning the crypto that secures these networks means you own the infrastructure that facilitates global trade. And I love it. Having said that, I was also getting some kind of George Orwell 1984 vibes when I listened to Larry Fink speaking. Fink keeps mentioning how every investor will have their own digital ID on chain. This means every investor's holdings and trades and movements in the market would end up being tied to their real world identities and, of course, tracked by the gatekeepers, the overlords of finance, the BlackRocks of the world. How does this mean that BlackRock or their friends could maybe freeze your trading ID, maybe freeze your assets if you're on the bad list? Well, given how much power they possess, I think these questions should be taken very seriously. Remember, BlackRock was like a big pusher for the ESG agenda and all that stuff. And even though they backed away, but from now, they were still there. Now, let's interrupt the conspiracy talk a little bit to let you know about the best damn newsletter in crypto. We know that BlackRock has an open filing for an ETH spot ETF, and we know that they think RWAs are going to move on chain. So the next question is, what blockchains are they zeroing in on? Well,
Jim C, you're right. You're not wrong. He said, I feel like you just blank out when NFTs come up. You're not wrong.
2 months after Larry Fink's interviews, BlackRock submitted an SEC filing for a new fund called BlackRock USDT Institutional Digital Liquidity Fund, or BIDL. BIDL. And the blockchain that BIDL operates on is none other than Ethereum, obviously. Perfect. Here's what we know about BIDL. Registered in the British Virgin Islands, BIDL offers Qualified investors, tokenized exposure to U.S. Treasury bills, repurchase agreements, and other money market instruments. Basically, investors purchase stable coins, but each of those stable coins is backed by U.S. Treasury bills and other interest-bearing dollar instruments. So the more tokens an investor holds, the more yield they receive. BlackRock's partner for BUIDL is Securitize, which is a San Francisco-based asset tokenization company. All investors' holdings and all transactions, of course, occur on digital wallets that are issued from Securitize. It's happening. The fund has already gone live, and it pulled in $245 million from investors in just the first few days after launching. So what do we see in here? Well, obviously, BlackRock choosing Ethereum is a huge vote of confidence for the network. And I know Ethereum network fees suck, but like when you're putting $250 million on chain, paying $20 doesn't really matter. And even though BUIDL is focused on tokenized money market instruments, the asset class alone is worth like $26 trillion. So, hey.
Real quick, does anybody know the Bitcoin fees still suck ass too? Because like Ethereum fees suck, yeah, but like Bitcoin's been ass lately as well.
That's a bit of cheddar, right? So pay attention if
you
more
guys know.
asset managers follow in BlackRock's footsteps, or BlackRock simply keeps doubling down and starts bringing tens of billions on chain. Now, another question you might be asking yourself is, who are BUIDL's qualified investors? What's BlackRock's target client? Well, that's where things start to take another interesting turn.
Neil said, yeah, still high. Damn, that sucks. Because like I sent literally $50 in Bitcoin the other day. It cost me $10, or $40 in Bitcoin. It cost me $10, so it cost me $50. I was like, what?
Here's
Insane.
Carlos Domingo,
That was before the
CEO
halving, too.
of Securitize, answering that very question 2 weeks ago in an interview with Lara Shin.
And who's investing in it?
We're not disclosing that. Those are.
Like not literally, but demographically, can you describe?
Oh no, these are all crypto companies. Look, the target of this is crypto companies. So we were looking at doing two things with this. One is obviously treasury management. So crypto companies have some of them very large treasuries. Some of them, they keep on their own token. Some of them, they keep it in stable coins. Some of them do have access to traditional bank accounts, but obviously it's a clunky interface. So that's one use case, right? Anything, all the DAOs, the foundations, etc., that they can move part of the treasury to an on-chain money market fund, daily liquidity, and then also managed by the largest asset manager in the world. So you don't have any counterparty risk towards any random crypto company that you're giving the money to manage, right?
That's right.
Damn, Jim C said he sent 0.25 Bitcoin yesterday and it was $35 fee. Let me check my Coinbase account. I didn't get nothing, bro. No, I'm just kidding.
BlackRock wants BUIDL.
That's crazy.
Treasury
That's not bad,
management solution for crypto companies, Web3 developers, decentralized autonomous organizations, and different crypto foundations. The selling point, according to Domingo, is that these companies are already flush in crypto and in stable coins, and that BUIDL gives them a way to manage and earn yield on their treasuries on chain, which is pretty good, better than trusting someone like FTX, right? Of course, this is all brought to you by the largest asset manager in the world, so there is a trust factor there that others don't have. And not to sound conspiratorial, but I've got more alarm bells going off. Here you've got BlackRock, which has these close ties to the Federal Reserve, courting crypto companies into letting them manage their treasury assets. That, along with all the talk about digital IDs and monetization, all that kind of stuff. Look, I've said it before and I'll say it again. BlackRock is here to pump our bags, and I'm all about that. But these people are not our friends. BlackRock is not here for the revolution. They never have been. And that's fine. We're here to make a buck. Crypto right now, public enemy number one.
Well, I think, to be honest, in regards to that statement, I think Larry Fink is kind of here to, you know, obviously, yeah, number one's to make money. Two is his legacy, right? I think he's getting to a point in his life where, like, do you want to be a part of the world that's changing and be like, go down in history as that guy that set that forth for BlackRock? Or do you want to be the guy that retired, got pushed out, and then somebody else brought that to the platform? You know what I mean? So I think it's kind of money and legacy.
to the U.S. Federal Reserve. So what happens if BlackRock gets a hold of a significant amount of treasury assets from major crypto institutions? And for one reason or another, the Federal Reserve and the powers that be decide to nuke the industry. It creates a fundamental risk long term. When BlackRock gets the call, are they going to stand up for the little guys, or are they going to stand up for their DC buddies? Or are they the ones that are going to put in the call to the DC buddies? I don't know. And maybe I'm just being paranoid. So why don't you let me know what you think in the comments below? But fundamentally,
we're all paranoid. Anyways, let's move on. Altcoin Daily. Shout out to Lark for that video, by the way. All right, Bitcoin price ready to explode to 150K. 3 expert predictions. Let's see what they got to say over here, guys. That like button. Appreciate you for hanging out. Let's do it. That's not how we're gonna do it because it's muted. That ain't gonna work, is it? All right, let's start this over. Here we go.
Hopefully we can get through the halving tonight, get some slightly more positive news out of the Middle East, which would be fantastic. And I suspect that can then see Bitcoin start to retrend higher. I'm still looking for $150,000 by the end of this year.
Standard Chartered Bank analyst has doubled down on their $150,000 Bitcoin prediction, reiterating that Bitcoin is still on track to reach $150,000 by the end of this year. These are his reasons why.
See, like, the only thing I have reservations about when people say like, oh, it's gonna happen by this date, like that shit never happens, because like just the narrative, right?
Reiterate what you just said. With Bitcoin trading below 65,000, your year-end forecast 150,000 per coin for Bitcoin and 200,000 by the end of 2025. What are the specific reasons for your expectations that we'll see a notable lift from here?
So part of it is those ETF inflows. As I mentioned, they've stalled for now, but I anticipate going from the start of this year to when the ETF market in the US is mature, we'll get between 50 and $100 billion of inflow. So far we've had 12 billion, as I mentioned earlier. Now, I suspect that can now happen over about an 18 month to 24 month period. When that happened for gold, when we went in the US from no spot ETF market in 2004 to that market gradually maturing, the price of gold multiplied by 4.3 times. So that could get us to that 150 to 200,000 range as sort of input number one. Input number two is over time, when you have enough investors, i.e. investors are fully sated in terms of their Bitcoin exposure, which hasn't been the case before the ETFs, but over time, if we get those ETF flows that should be where we end up. In terms of a portfolio between Bitcoin and gold, you should get to about 80% gold, 20% Bitcoin. And for that, even if gold prices were to go sideways again, that gets you to that $150,000 to $200,000 mark in terms of Bitcoin. So there's a few factors that are all driving to roughly the same level. I think medium term, if we get to 200,000, because of the institutional flows as well, it's much more likely that Bitcoin won't have a large retracement, which it did have in previous cycles.
So do you think?
Yeah, so he's predicting the gold ETF, like the way the gold ETF went with the Bitcoin ETF. Yeah, exactly, fully electric.
That a 150,000 Bitcoin price by end of year, is this realistic?
I mean, it could happen, right? Let's be real, it could, for sure. I think we'll break 6 figures. I think that's probably in the cards, right? But 150, I don't know. It's usually like a decent amount less than what people are predicting. That's just my opinion. That's usually what I've noticed.
Some people would argue that since everybody is thinking this, it won't happen. But if nobody thinks this is going to happen, maybe it is more likely. Or maybe everybody thinks this is going to happen, so this is too conservative.
See, let's be real. It's one of those things, like we saw an all-time high before the halving. That's never happened. You know, the 7 green candles, monthly green candles closing in a row. It's only happened once, right? Like there's so many things that are just different this time around. I mean, who knows? Like, who really knows?
Anthony Scaramucci gives his updated investment thesis on Bitcoin. He thinks that a $150,000 Bitcoin price is likely, but his price prediction, is actually a bit higher. Interesting perspective. Listen.
Bitcoin is on an adoption curve. If you go back to Web 1, Bitcoin is sort of in the 1999 point in the spectrum. And so just imagine where we went from Web 1 to where we are today. And so my point is you won't see this be a inflation hedge or a store of value, as other pundits are saying, until you get over 1 billion users. And so right now, it's going to be way more volatile than people like, and people look at it as a risk-on or risk-off trade until we get to that adoption curve. That's my point.
And given the adoption curve, what do you see right now as the upside and number, and what do you see as the downside number, call it 12 months?
Well, I mean, look, you could get shocks like wars, and you could get, God forbid, a terrorist calamity or something like that that could take Bitcoin down 10 or 15%. But I think you have a heavy bid on Bitcoin because of the demand from the ETFs and from the eventual drivers of things like the wirehouses that will enter the space, as well as the 401k market. So I don't think you have 50% downside, but you could have 10 or 15% downside just because it's still a risk-on, risk-off asset. But long-term, I think this thing trades to $170, possibly to $200,000. And that's consistent with where it's been over the 15 years of Bitcoin.
Look, it's normal to be skeptical. If investing was easy, everybody would make money. Unfortunately, most people...
Well, it is easy if you just buy and wait.
People are going to buy the top. Here is a message
if you can
from
deal with
Anthony
the pain.
Scaramucci to all Bitcoin skeptics. I actually sent this video to my best friend who's also wondering about this. Watch.
You guys have a lot of skepticism on the Des. I think the skepticism is well-founded. I started out as a skeptic. I think what got me past being a skeptic is the notion that this is immutable. It's decentralized in a way that makes it very powerful. The network itself is scaling. And if you think about the way we treat money in our society over the last 5,000 years, Bitcoin checks all of the boxes. The only box it doesn't check is central bank manipulation, which I think it makes it way more powerful. And so at $1.4 trillion, could this trade to half the market capitalization of gold, where gold is $16 trillion today? We believe it can. We actually think it's going to go through the market capitalization of gold. And if you're making the point that the American owners in an ETF are not going to be enough to get it there, I disagree, because over time, the acceptance regulatorily is going to allow people to put it in the portfolio. A 1% position in these global portfolios takes it there.
So everybody is talking about post-Bitcoin halving predictions now. And I think CNBC's longtime Bitcoin expert, Brian Kelly, here perfectly lays out the Bitcoin investment thesis for the rest of this year. This is exactly what will send Bitcoin to $150,000.
Joining us now to talk about the effects of the halving on all things crypto is our resident Bitcoin aficionado, Brian Kelly. It's great to have you here.
Good to be here.
So what do you expect? Are we going to see another 450% rise after this halving, or does the effect sort of dissipate each time?
So I think it's certainly the halving effect is going to dissipate. If you talk about how many dollars into the market this is, you're talking about last week it was about $60 million a day of sell pressure. That's now cut in half to $30 million a day. But you're talking about $1 trillion market. So it's very, very small. So I think if anything, it's going to be the psychological impact of it and the fact that we're all saying, hey, look at this 4-year cycle that we have out there. Probably what's more important, though, is when you get to see some of these bigger brokerage firms come online. So Morgan Stanley, UBS. Once they are online and they can have their customers start coming into Bitcoin, that's a lot of pent-up demand.
That's the biggest thing.
What about with the ETFs? How does that change the game now? Because last halving, we didn't have ETFs.
That's right. And I think actually it changes tremendously. That's why Morgan Stanley and UBS are so important, because up to this point, they have not been able to buy those ETFs. Their clients haven't been able to buy it. So if you think about it, you now has an asset with the most demand it's ever going to have, right? You've got all these people just able to come on, and supply has been cut. Coins on exchange are down. So you're having a whole bunch of pent up and potential demand hitting lower supply. To me, that's the bullish setup for Bitcoin.
Bitcoin is an easy 2 to 3x from here, yes, but now attention is starting to turn into the altcoin market. Brian Kelly gives his picks.
What are some other ways that you're thinking about playing this? If you do take that 10 to 20 year view that it's going to be this ecosystem that's created, other than the ETF, other than buying Bitcoin straight out, what are some other things that viewers should look at?
Yeah, so I would look at some of the other coins. So that would.
So this music that he has in the background is awful. I just had to say that.
Be Ethereum.
Awful.
One, Ethereum and Solana are probably the two that you could buy this cycle because those are going to be the ones that the new financial system's built on top of. So decentralized finance, heard about DeFi. Those are the two that are really in the lead for building that.
Ethereum and Solana are solid picks for sure. Guys, make sure you subscribe. I'm going.
All right. It's going to show for the rest of the time. Mr. Altcoin Daily, shout out to them for that video. All right. Move on to the recap of things. Let's see. Looking like a $66,099 Bitcoin. We got 3,200 bucks, 3,250 actually for Ethereum. Let me see if I can find that. Oh, here it is. Mr. Crypto for Seniors. This is what happened with Hedera last night. Hedera HBAR price soars 70%, then crashes amid BlackRock Association rumors. So they were rumored to have, obviously, you know, something to do with BlackRock. Give me 2 seconds. God, wife comes down there to say bye, and she almost knocks over my light and breaks everything. All right, bye. Yeah, whatever. Better than a glass, she says. Ooh. Big oof. All right, yeah, Hedera had I guess there was some rumors with some bullshit here. Recent announcement about tokenizing BlackRock's U.S. Treasury money market fund on the on its blockchain has set off a frenzy trading for its native cryptocurrency HBAR. Although it's important to clarify that BlackRock wasn't directly involved in this project, the news was caught the attention of traditional finance. So this was like, yeah, it was just some bullshit FUD. I don't know who made it up or what happened, but that's it. So I gotta read into that a little bit more myself. But yeah, HBAR is up still 46% on the day. If anybody's interested, it was up 80%. It went up to 17 cents last night. Yeah, right here, 17.7. I assume that's the highest point right there. And I was trying to swap out on my Tangem and would not work. It would not work for some reason. It just would not. So this is what it is. HBAR, I noticed, always has a problem swapping or something, communicating with Tangem. It's kind of weird, but every other coin's fine. Like Caspa swaps perfectly fine. Everything else you want to swap is like usually fine. It's just, yeah, I don't know, HBAR, weird. Anyways, flashbang 72 fear and greed index. Just to recap, let's check out, see if anything's doing crazy. Sand actually had a decent jump up today as well, didn't it? Where is it? No, maybe not. Oh, right here, 2.8% up on the day. It was at 50 cents at 49.5 as of now. All the meme coins seem to be popping off. Let's just check real quick. Categories over here. Solana meme coins, I guess. Looks like dog with hat, bonk, cat in a dog's world. Book of meme, boom, is up as well. 1 cent as of right now. I actually have a little bit of this. Let's see, Slurf, Myro. Everything's kind of up on the last 24 hours anyways, right? Seems to be. Interesting. Very, very interesting. What's your guys' favorite meme coin? Throw it in the chat, just so I know. Interested to know what you guys are into. Automatic beats, that's great. Sorry you missed out, brother. Yeah, dude, no worries. It was like, honestly, I didn't have enough into HBAR for it to really matter. But it yeah, it kind of sucks. Like you need to, so HBAR, you would need to have swapped it on like MEXC or CoinX. I don't have any of those exchanges, to be honest. Gate.io, I guess. Coinbase, what? Wait, what? Hold the phone. That's not right. That can't be right. Now I gotta look. What? You can buy HBAR? You son of a bitch. Yeah, apparently you can get HBAR on Coinbase now. What in the hell? What in the hell? That's messed up. I didn't know that. All right, well, there's that. It says recently updated. I don't know. Yeah, I didn't know it was on Coinbase. That sucks because I would have sold it last night. Damn it. Anyways, well, can't win them all. Usually just lose them is what it is. All right, let's see. Favorite meme coins. Bugna Floki. Nice. It's on Coinbase. Damn it. So it's been on there. I didn't know it was on Coinbase. That's messed up. Hey, yeah, the more you know. The more you know is what it is. All right, let's see. I sent you something, a 1UP coin, but it's still pending. Dude, I just reconnected my alerts too. Mr. Dan R, you're awesome. Thank you so much. I don't know what you sent me, but I'll look. Oh, what in the hell was that? Hold on, let me bring this up, see if I can find it. Go to my assets. Yeah, no, I don't know what you sent, but I appreciate it. Anything you sent, dude, you're awesome. You are perfect. Really the best. I really appreciate it as well. All right, let's I guess we're gonna move on. We're gonna go raid Miss Randy Hipper. She's gonna be live in 10 minutes. So yeah, that's what we're gonna do. I appreciate all you guys for hanging out with me on the daily grind. This is Wednesday morning. Hopefully you guys only have a couple more days till payday, so enjoy your hump day. Be safe. I appreciate you, Dan R. Thank you so much again. Fully Electric, my man, appreciate you as well for letting me know about Hedera last night, actually. And yeah, I can't wait to see when ASPA actually breaks out. I think it might at some point, but we will see soon enough. You guys have a great, happy, and safe Wednesday. I'll catch you guys bright and early tomorrow morning, 8 a.m. Eastern Standard Time. And until then, peace out. Have a good day, guys. Thank you again, Dan R. Perfect.
Eat shit, Gary.